All right, what's going on, guys? My name is Omar, and I'm here today on Paladins YouTube. We kind of came up with this idea where I came, hosted, because I wanted to ask Paladin different questions in regards to trading, how his trading has been able to scale, his journey, tips and tricks with psychology, trading tactics, and all that good stuff. So, without further ado, let's go ahead and let's introduce Paladin.
What's going on, guys? Welcome back to my channel. This is going to be a very interesting one. This is going to be my first ever podcast uploaded online. So you guys don't want to miss this. We're going to go over a lot of things, how I got seven-figure funded, how I got multiple six-figure payouts, some tricks and tips, some exercises that I use. So be sure to watch till the end.
All right, perfect. So Paladin, right? You've been on multiple different podcasts with Trading Nut and all these other different platforms. So just give people a brief introduction to you and your journey, right? How did everything begin? How did you hear about trading? And then we'll dive deep a little bit more into all the trading stuff, right? Because people, they already know your story. People are going to learn more about your story as well. So I kind of wanted to focus primarily on like trading strategies, trading tactics, things and tips and tricks again, just to help people out. But just give people a quick introduction into the life of Paladin.
Perfect. Okay, yeah. So I started trading in 2019 with IML. I was introduced to Forex when I was in high school. First semester in college, I dropped out to go full-time on trading. I ended up making some money, blowing my accounts, back to college, in and out of college. Then in 2020, I discovered prop firms, which saved my trading career. I was so close to quitting, but then prop firms came, and I just thought, oh my God, if I can exploit this, if I can put in a couple of hundreds of dollars to be able to trade tens of thousands of dollars or hundreds of thousands of dollars, I can make a lot of money with this. So I just stuck with prop firms. 2021, I had my trials and tribulations. I lost a lot of my account. I was down tens of thousands of dollars. Then finally, in 2022, I was able to make my big year, my breakthrough year, $250,000 in prop firm withdrawals. So here I am now in 2023.
All right, perfect. And something that you talked about was the whole funding experience, right? Because that's something that's a lot more popularized now versus back then. So, how did you hear about funding? What was your first initial experience when it came to funding? What were your initial thoughts? Because I know for me, when I first heard about FTMO and all these funding platforms at the time, I think this was what back in 2021. I was very skeptical because the idea of, hey, I pass a challenge and I get access to 100K capital, 400K max allocation, that didn't sound realistic, right? Because sometimes they say if something sounds too good to be true, it probably is. So, what was your first experience with funding and your initial thoughts when you came across FTMO?
Yeah, so my first ever funding prop firm that I discovered was in 2020, June 2020, when I was in India, and I discovered FTMO. And I remember in my trading communities, I would say, "Do you guys know about FTMO?" A lot of them were like, "Nah, it looks like a scam. It sounds like a
Yeah.
scam," because it wasn't common back then.
Mhm.
Around that time, 2022 now, and then when I started with FTMO, I started with a 10K challenge. I started very small because I wanted to test it out if it was legit or not.
Yeah.
And then I failed my first challenge, the 10K challenge, and I went on to do a 50K challenge, which I finally passed. And that was when I was able to make my first withdrawal 6 months later. And I soon found out that this was actually a legit thing, that funding was legit. So I just continued on with that journey since then.
Okay, that's very interesting, right? So typically you just talked about how you went from 10K to 50K, right? And I know you said 10K was just to kind of test it out, right? But inside of the prop space, a lot of times, and I think this can kind of mess people up a little bit where they jump from one account size to the next, right? So I know now, right? You have multiple seven figures in funding. You traded. I saw you since last year kind of elevate and slowly add more allocation, start trading bigger sized accounts, right? I remember before I used to see you trade like 200K accounts. Now I see you trading 400K at a time, obviously with copiers as well. But when should a trader kind of have that transition of like, you know what, I'm ready to kind of go up that next step in terms of, I'm comfortable trading a 50K account, but maybe I want to try that 100K account.
Yeah, so one thing that I always say for new traders is they have to survive before they thrive. Because just in this industry, if you're able to make some sort of money, that's good. You shouldn't jump to automatically to a higher challenge, especially if you don't have experience, right?
Mhm.
So if you start with a 50K challenge and you eventually do pass and then you get a payout, what I say is you reinvest that payout into a higher challenge. That's the key. You have to build your foundation throughout these years since 2021, 2022, when I was building my capital, I was building my foundation. I knew that if I were to hit 7 figures worth of profit from capital, I could make hundreds of thousands of dollars. That was my plan in the back of my head. I did not just all of a sudden get 7-figure funded and then made hundreds of thousands of dollars. I planned it accordingly. I know that if I start off small, I started off with 100K in 2020, 50K and 100K 2020, 2021, I started experimenting with 200Ks. And then 2022, I started doing 400Ks, but that was after I kept passing the challenge. That was after I reinvested the profits. And now in 2023, I'm managing 7 figures worth of profit from capital. So it was a slow elevation for me. I didn't start off from 0 to 7 figures from the beginning. I started 0, 50, 100, 250, 400, finally 7 figures. But the funny part is that from 0 to 400K, it took me almost a year and a half or 2 years, right, to get max allocation. But from 400K to 7 figures, it took me within 3 to 4 months. And that's because with that 400K, say for example, a 0.5% risk, right, risking 2,000 to make for me a 1 or 2, 4,000. With that $4,000, I would just buy more challenges. So I could afford now to go slightly more aggressive with these new challenges. In the beginning, I had to go conservative because I can't just put in $500 or $1,000 into a 100K or 200K account and start off risking 1, 2% from the bat. I had to go 0.5%, create a buffer. When I'm up 2%, then I'll risk 1% because I couldn't afford to lose money. So it's definitely trading and getting funded is definitely exponential. From my experience, my profits were exponential. My funding was exponential. So yeah.
It's funny that you bring that last point up about how everything is exponential, right? Because there was a podcast on Chat with Traders where some guy named James King, he talked about success, right? And he talked about how success, people assume it's this linear thing, right? Like, it's like a building block. Step by step, you start to become a little bit more successful and you start to see growth in a linear fashion. However, he studied like multiple 7, 8-figure traders. He studied like people like Elon Musk, people outside of the trading world. And he said like, it's actually completely false. That's linear. It's always going to be exponential because a lot of time there's progress being made that's not being shown in someone's journey, right? Like you could be making progress day in, day out, but then when you look at your trading account, for example, you might not see any P&L. You might be break even, maybe you're even losing a little bit of money, right? So, but then when everything starts to click, you have that exponential growth, whether it's in trading or any other endeavor. So give me kind of those steps when you were kind of on the come up, right? How were you able to kind of, even though you may have seen progress, like, my trading skills are developing, my mental game it's developing. How are you able to kind of stay the path and not get discouraged during that time? Because again, you were making progress, but it wasn't in this linear fashion where like a month later, 2 months later, you were seeing these results. It was kind of like, it might have been stagnant, but then like you said, in 2022, that's when everything took off. So how are you able to keep yourself level-headed during that time when things were progressing, but you weren't seeing any results?
Yeah, so it was not like every month I was progressing. It was 1 month I would get 200K funded and then I might have blown it because I got greedy, and I would learn from that experience, start another one up, and then again, I would blow it again because I would forget the lesson. So one thing I always say is don't forget the lessons in the past, because if you forget it, you're doomed to repeat it again, just lose the same account. So it took me a while to have these experiences. And then finally, when I was able to learn from them. So wait, actually one thing. So I blew my funded account. I blew like almost all my money in my bank account. And I actually lost hope in trading. And that's when I decided to go back to college. That's when I decided to work as a doorman, working 36 hours a week. That's when I decided to also train for a marathon. And then all while doing trading on the side. So when I was just doing all of that, when I had that backup plan, as you can see somewhat, when I knew that I didn't really need to rely on that trading income source, that's when I started seeing the most amount of improvement in my trading. That's when I started seeing, okay, I'm passing these challenges relatively slow. I mean, it's taking a couple of months, but I'm actually passing them. I'm actually getting profitable. And eventually it just happened. I was just continuing on my daily schedule, right? School, doorman, working. And as the months and months went by, I just kept following my trading rules. I was not too focused on trading. I was making money. Eventually, I was able to make 20, 30, 40K. And then that's when I decided, okay, I'm going to stop trading and I'm going to stop working a job and I'm going to go full time on trading. So I saw the most amount of improvement in my trading when I had other things to focus on. It was not when I was just fully focused on trading. It was not like I came up, I was just doing a 50K account. My entire day was spent on that 50K account and then 100K account the next month and then 200K. No, I had a job, I had school while I was doing trading on the side. Eventually my trading side was able to take over and be my full time. So that's what happened with me.
Yeah, and that's interesting, right? Because I think people, they want to skip through that process of, maybe you just kind of have to sacrifice a little bit of your time to earn income outside of the markets, right? Whether it's a job, whether you're doing some other sort of side hustle, right? To get that income, to have the luxury to be able to, like, all right, you know what? I can now purchase this account and build that buffer up, right? Outside of the markets. Okay, so I want to kind of transition a little bit to, like, in terms of your journey, right? The people that you've learned from. What were some of the main lessons in terms of, well, first of all, who were the mentors that you kind of had coming up in terms of, like, learning technicals, learning psychology? You can talk about even mentors who are in the trading niche that might have helped your like your psychological game.
Mhm.
But let's stick to the technical side. Who were the people that were kind of instrumental in your growth? And if you can kind of, like, go a little bit in depth on what exactly they provided that was different from other mentors.
Yeah, so 2019, I was in IML halfway. 2019, I was in IML. I went through 7 different educators. I learned all types of strategies from indicators to support resistance line. Every little space put a support resistance line, Bollinger Bands, Elliott waves. I've been through all of that. And then 2020, I went to India for 6 months to focus on trading. Right, that was when I discovered ICT. So the way I discovered ICT was actually on YouTube. There was a YouTube video called Institutional Trading, right? And just the way he explained it, how retail traders place their stop loss above the high, and then that's when price goes and takes it out. And it makes you kind of feel special, like, oh, I just found a special technique, a
Yeah.
special strategy. And then he was like, okay, yeah, I learned from ICT. I'm like, who's ICT? And I started studying his old course, which I stumbled upon. I think it was like 2017. I found 2017's course very, very, very helpful. I recommend that. I think it's on his YouTube channel, so go check it out. And then while I was studying ICT, I also discovered I was also in another monthly subscription thing, right? And in there was this educator named Gene.
Gene, yeah.
So then from then, Gene did his own thing. I just joined Gene. He had live sessions, which I would hop on and see how exactly does he implement ICT strategy. I would watch that. I would watch ICT. And then 6 months, 7, 8 months later, I decided, okay, I can't just rely on this guy I can't just rely on his live sessions every day to make my bias of the day.
Yeah.
I knew that I had to stop joining his subscription. I had to do this on my own to gain that confidence, to prove to myself that I could be a full-time trader on my own. Because what if something would have happened to him? I can't just rely on him. So then that's when I went on my own, I had my losing streaks. I learned from it. That was when I gained the most amount of experience, when I was on my own. And also in 2021, I joined ICT's mentorship. He had his analysis also being shown in the charter section. That helped me a lot. But like I said, it all came down to not looking at all these other educators. So after maybe 6 months to a year of watching them, it's like, okay, I know what they're doing. Let me just try it on my own now. And during that phase, when I was on my own, in 2021, I lost a lot of money, but I gained the most amount of experience. And then all that experience accumulated to 2022 when I was able to make that big breakthrough year.
And it's interesting that you bring up ICT. I was also in the, I'm also like a charter member. So I joined it was in 2018. And it's very funny that you say that, right? Where like, there comes a point when like someone's learning from someone and then they become a little bit dependent on the individual's analysis, right? Whether, like you said, with Gene doing the live streams or ICT when he had those commentaries every single week where he would give his bias, right? But it's very important, like you said, to kind of like develop that own skill set because you don't want to be dependent on someone else because now when you're trading, the confidence in yourself isn't necessarily there anymore, right? Because the only reason why you're confident in a bias is because ICT told you, hey, I'm bullish on Euro USD, right? Or Gene, oh yeah, I'm bearish on USD CAD, for example, right? So it's funny. It's interesting that you say that because I went through that same thing where I realized like, hey, I can't be dependent on this person's analysis because my confidence is only rooted in that person's analysis, right? So it's a very interesting discussion about confidence because confidence is a very integral part of trading, not just in trading, but in life, because you need to have the confidence to execute your trades. You need to have the confidence to pursue things that's uncommon. So take me through your steps on how you were able to build confidence. Were you someone who's always confident? Like, as I mean, you're pretty young still, right? You're only 22. But like when you were like 17, 18, were you as confident as you were today? And if so, or if not, kind of give that journey on how you slowly were able to kind of build up the confidence in yourself that kind of translated into trading.
To be honest, I don't think I was confident like when I was 18, 19, 20. I think that was the reason why I got into trading because I knew that trading, getting money was the only way to be able to gain more confidence, you know? So then I think so the person who I was when I started trading is way different than who I am now. Like if you were to go back to the high school me, you would not recognize that person. That person was very not too confident, but undisciplined, didn't have the mindset that he has right now. And just the way I was able to gain confidence through trading was through trading psychology books.
Mhm.
Even though there's a very good book out there called Trading the Zone, as cliche as it sounds,
Yeah, yeah.
that book gave me that transition from, okay, you know your technical analysis, but now the psychology part, how can you make sure that you are profitable? When I was studying under ICT and Gene, yeah, I was watching the videos. Yeah, I was making money sometimes and losing it the next day. But when I discovered Mark Douglas, that
Yeah.
was the biggest transition when I saw in the change in my profitability. I was able to be profitable after studying trading the zone multiple times, after watching Mark Douglas's Mind Over Matter YouTube video, which is like 1 hour long, which I highly recommend. That was when I was able to build confidence because I remember I would have like a losing week, right?
Mhm.
And in the weekends, how I would get my confidence back, or maybe the session after, was I would read Trading the Zone and I'll be like, oh, okay, that makes sense. Okay, yeah, so I'll just read Trading the Zone and there will be sections where they were saying that technical analysis is not everything, that if you have an edge, just let the edge play out, let the probabilities play out, think long term, stop thinking short term, the macro over the micro. And that would just give me my confidence back for the next trading session. I would just think, okay, that last loss was nothing. I know that if I think long term, like Mark Douglas says, if I think over 10 to 30 trades, what is the end result after those trades? Not what is the end result after one or two losing trades.
Mhm.
So trading psychology, Mark Douglas gave me that confidence. It gave me that proper trading psychology mindset to be able to make money in these markets somewhat consistently.
Yeah, and it's good that you touched on that topic, right? And you kind of alluded to essentially Mark Douglas helped you have the proper perspective on how trading actually works, right? Because as we know, when you go on social media, you kind of see like all the luxury stuff. You see like this lifestyle. You see this person making money every single day. Anytime they post a trade idea or a trade, they're always in profit, right? So it's good that you brought that up because I think it's very important for the listeners to kind of understand that hey, having the proper perspective going into the trading and the proper expectation, it'll help you psychologically, first of all, be more confident and more calm when approaching the charts. Now, one thing I wanted to talk to you about in terms of confidence as well is you've publicly posted about FTMO and how you feel like I think it was almost 40 challenges, and you went through like pretty much the same route as a trader where people are losing money, people are failing challenges nowadays, right? Because now it's more common. Um, how are you able to kind of after going through all those blown challenges, right? How are you able to kind of use your confidence to kind of like keep going and keep pursuing the funding route? Because most people they'll think, you know what, it's a scam. Oh, these funding challenges are too difficult, you know. But how are you able to kind of be like, hey, you know what? I lost all these accounts, I lost all this money, but I'm still gonna go ahead and pursue that route.
Yeah, so one thing about me is since I was young, I've always had big dreams and I've always not been a quitter.
Hmm.
So when I was my second, third year in trading and I was losing all these accounts and I was down tens of thousands of dollars, I was like, oh, I can't quit now. I already invested this much
Yeah.
time. If I were to quit now, what makes me think that I could go into some other industry and succeed in that? So I spent all my time, my energy, my money into this one field. So I have to be successful in this no matter what. So I kept feeling my challenges, and that's why I went back to college. I went back to working a job. But I knew that it made sense as long I just kept getting greedy. I knew what I was doing wrong. It was not my technical analysis. It was just that I would get a funded account and I would get greedy. I wouldn't create that buffer, which I have now. So I always say, once you get funded, don't think you're rich. Don't think you've made it, because there's a statistic out there that only 30% make it to their first payout, which is crazy. So I say that once you get that funded account, you create a buffer of 2%. I like to use 2%. So I start out risking 0.5%. I would not start out risking 1% off the bat unless you have a bunch of funded accounts, unless you have a safety net. But if you have your first funded account, risk 0.5% until you're up 2%. Because if you're risking 0.5%, it would take you 20 trades to blow the account. So mathematically, I would just think about that. I was just think, okay, when I get that funded account, I'm gonna stop risking too much. I'm gonna stop over leveraging, because the moment I get that funded account, 20 trades in a row. What's the likelihood of me blowing an account? What's the likelihood of me losing 20 trades in a row? Impossible. So that was my thought process. I knew that it made sense. It's not like I'm wishfully thinking.
Yeah.
It's like, okay, if I get a funded account, I'm a 200K funded account, that's 20K, right? That's 20K capital basically. So 20K, I could definitely make some money out of 20K. And then if I just reinvest the profits into other challenges, into other funded accounts, and eventually do get 7 figures, I could make thousands of dollars just by risking 0.5%. So it made sense to me when I was in my lowest point. It made sense to me if I can get to that endpoint, that 7-figure status or even the 6-figure status, I could make good amount of money, because in today's world, I think I was making 1,800 working 36 hours a week in a month, right? 1,800. Now with a 100K funded account, 1,800 is like what? You're risking 0.5%, 500. Actually, that'll be like two wins if you're risking 0.5%, right? So, or if it's a 200K account, it'll be a 0.5% risk to make what you make in a month. So it made sense to me back then. Like, okay, this makes sense. I just got to stop making the stupid mistakes that I keep making because of my greed, because of my emotion. I need to control my psychology. That's why I always talk about trading psychology being so important. I believe that to be profitable in trading, you need 3 things, not just only trading psychology, but the first thing is a trading strategy with the data showing that you do get a certain accuracy. So for me, my data shows me that I make around 50 to 70%. My trading strategy gives me an accuracy around 50 to 70%. The second thing you need is a system with an edge, so your trading rules. And then the third thing you need is the proper trading psychology, the proper trading mindset. That is basically having the attitudes to prevent you from getting reckless. So yeah.
So give the audience one or you could give the audience up to 1 to 3 practical ways that you were able to kind of improve your psychology, right? Because we always hear about like, oh yeah, I got more confident over time. I was, like you said, you were reading books, you were able to implement certain things. But what are like the top, let's just say top 1 to 3 things that you can actually, the listeners can go after this podcast, go and implement into their daily routine, into their daily lives that you personally have found success with? Because again, we hear it all the time, psychology this, psychology that, but most of the times people forget to include like kind of like the practical route on, hey, you know what, I'm going to implement this today. So that way I can actually improve my psychology.
Yeah, so there's 2 practical things you can do. The first one is the coin flip, which I always talk about. I got this from a YouTube video. This guy named Dr. David Paul, and he basically showed me that if you flip a coin 10 times, right? And my system is a 1 to 2 risk to reward. Yeah. And say you're risking 1%. So you flip a coin 10 times and you know that it's likely to land on heads 50% of the time. So you flip a coin 10 times. At the end of the 10th flip, if you hit tails, we'll say, like, if you want to compare the trading, tails is a stop loss, negative 1%, and heads is a TP, plus 2%, right? If you flip it 10 times, 90% of the time you are going to be profitable, because the math makes sense if you want me to show you. So 5 heads and 5 tails, right? So 5 TPs, 5 stop losses, 50% accuracy. 2, 4, 6, 8, 10. Stop loss, 1, 2, 3, 4, 5. 10 minus 5 plus 5%. Yep. And that's if you're risking 1%. So that's one thing that helped me think long-term probabilities. If I were to lose one trade, I would think, okay, I still have nine flips left, 9 trades left. Stop thinking on a trade by trade basis. Think over a series of trades.
Yeah.
If you think on a trade by trade basis, then you're going to be trading with fear. The next trade, like, I just lost my last trade. Oh my God, I just lost this trade. And the best part, the thing that gives me the most amount of confidence is even if I were to lose 7 out of 10 trades, I'm only down negative 1%. And I'll show you guys the math again. So 7 out of 10 trades, stop loss, negative 1, negative 2, negative 3, negative 4, negative 5, negative 6, negative 7. And then 3 TPs, 2, 4, 6. 6 minus 7 is negative 1, only down negative 1%. So imagine that. If I lose 7 out of 10 trades, I'm only down negative 1%.
Yeah.
That itself should give you confidence. That's what gives me confidence. And the second thing is I actually created this analogy just a couple of days ago. So I was watching this hunter that I look up to. I mean, I don't hunt, but it was just like I like his mental toughness because he runs like ultra marathons, 200 milers. His name is Cameron Haynes, right?
Oh, I know. Yeah.
You know him?
Yeah.
So basically I was watching his documentary about how he hunts. And he basically, when he goes hunting, he's a bow hunter. When he hunts, he doesn't just kill an animal immediately. What he does is he makes sure that everything is perfect. He makes sure that it's not windy. He makes sure that that the animal's not moving too much. He makes sure that he's within a certain distance before he attacks an animal, because he knows that elk or deer can last him for months. So he doesn't go into the forest just thinking whatever animal gets in front of me, I'm gonna shoot it down.
Yeah.
So then I created an analogy, which is basically, say for example, there's a hunter, he's in the middle of the forest, back in his shelter, he has a bunch of food, and now he has 10 bullets left, right? He's going to the forest and he has to survive for a year. If he sees an animal, but the conditions are not great, the animal is moving too much, it's windy, it's raining, he's not gonna shoot at it. He's gonna wait till tomorrow when the conditions are much better. Now say there's another hunter. He has a gun, 10 bullets, he has shelter, but in his shelter, he has no food and he's starving. So now the next animal he sees, even if the conditions are bad, even if it's windy, even though the animal is moving a lot, he'll shoot it because he's starving. So if you relate that to trading, you want to be like the first hunter. You want to make sure that you have a safety net. You want to make sure that when you're targeting these trades, that the conditions are good, that everything is set up properly aligned, that you're not forcing the trades, that you're finding the A+ setups. Whereas the second hunter, if you're a trader with the characteristics of the second hunter, you're starving. You want this so badly. You want to make money so bad. You have no safety net, and you just keep forcing trades. You'll attack any trades that comes up that you think my hit TP is 50-50. Then that's not good for you. You need to be like the first trader. You need to be like the first hunter. So that analogy is what I keep in mind. I keep telling myself I'm the first hunter. I make sure that all the conditions are good. I'm not starving for these trade setups. I have a safety net. I make sure that if there's a clean A+ trade setups, I'll take it. If there's an iffy trade, I'm gonna let it go. I have till tomorrow. As long as the markets are moving, there will always be another great opportunity.
And that's a great point that you bring home, right? Is ultimately, as humans, it's very important, and specifically traders, it's important that we have the conditions, like you said, where we're able to trade in that sweet spot. We're able to trade kind of in the area of comfortability, right? Because so many people, they try to get out of poverty from trading. But if you kind of look at most traders who are doing very well, a lot of them have financial backing. And I always bring this up because e-commerce guys that I've seen who've made so much money in crypto specifically, they don't know much about trading. They'll know like the basic support, resistance, and then in a bull market, it's easy to trade. Just buy any dip and essentially it's going to go higher, right? But these are the guys that are able to have crazy returns because they're not necessarily worried about the money that they're investing, right? So like you bring up like putting a trader should put themselves in a condition and in an environment where they have the tools and they can optimally perform is something that most people don't talk about. And it's very impressive because you're only 22. Last year was your breakout year. You've made a couple $100,000 in payouts. You have multiple 7 figures in funding from various companies. How much has funding changed from the day that you started with FTMO to nowadays where there's so many different funding companies? And what are some of your requirements when it comes to, hey, I want to go ahead and, maybe get more allocation from this company?
Yeah, so just one thing I want to add on to how you said a lot of these traders, successful traders, when they started, they had some sort of financial backing. That's true because, like I said, when I was working a job, when I was in college, that's when I made my first 40K. Same with Jade Cap or Kyle.
Yeah.
He's a trader that has made $500,000 worth of profit from withdrawals within the past year and a half. He started from zero payouts to $500,000. But the thing is, he had a six-figure job backing it up. So a lot of these successful day traders, they have something. Same with you.
Yeah.
You made six figures when you had that insurance broker job. We didn't just start from the, I start from the bottom. We all start from the bottom, but we weren't just we didn't come up from just trading by itself.
Exactly.
We weren't just focusing all day on trading. We had different backing. We had financial backing to make sure that helped our trading.
100%.
But yeah, going back to what you were saying about the capital allocation, how much it has changed. So FTMO, when I started, we had to make 10% in 4 weeks, right?
Yeah.
So that's why I lost a lot of challenges in the beginning. I lost a lot of challenges in the beginning because of that, man. That pressured me to make more. That pressured me to take more trades. Like I couldn't wait for A+ trade setups. And then nowadays we now have 8% in 4 weeks.
Yeah.
We have very, very, very few with unlimited trading days. Some are a little sketchy, so we don't know yet. But after FTMO, I went to my Forex funds, which is 8% in 4 weeks, which helped a lot. Then I went to the funded trader. So the way I pick my prop firms is I don't care about the price. What I care about is the reputation, the reliability. I want to make sure that if I put in all that work, I'm gonna get paid out. So if there's a very, very new prop firm, super sketchy, I don't know the owner, I don't know, they're not, it doesn't, it's looking like from the social media platforms that they don't really care much about it, that they're just trying to accumulate money from the customers by giving some cheap price, but they might not pay out, then I'm avoiding that. That's why I don't know any of these sketchy new prop firms that are out. So I stick with the best companies, and I also stick with the companies that I could see the owners, that have that reputation, that reliability, it seems like they are fully invested into this prop firm, that they actually want to grow this prop firm. So that's how I pick my prop firms. But yeah.
Yeah, and I think that's very important when because that's the same process I personally use as well, right? Because for me, I kind of also look at, like, first of all, the trading conditions, right? Because if we're going to be trading on their platforms, I want to make sure I'm getting the best spreads, the best, execution as well. So that's a big factor for me, but also the credibility, like you said, because we're kind of in a time now in the prop firm niche where it's like so many different firms are coming out, right? And again, there's some firms that come out and you don't even know, like you said, the owners, they could be here today, gone tomorrow. So it's very important for, like, anyone listening, like you said, to kind of make sure that they do their due diligence on any prop firms that do come out, right? And obviously, there's no secret. You've been kind of in the prop firm niche. You've grown your brand specifically from prop firms. Do you think you would be in the position you are today if prop firms did not exist?
Yeah, so I was talking with JCap as well, and me and him both agree that if prop firms weren't here today, we wouldn't have been in such of a high position that we are today. We might have made it, who knows, but we definitely would not be in the position we are today because that capital is a big factor in our success. We're not going to be able, because when I started, I only have $500, right? $1,000. You think I'm going to flip $1,000 to over $250,000? I don't think so. So that prop firm capital, prop firms in total, that whole industry, I came up from prop firms. I wouldn't be here without prop firms, and I give like my entire life to prop firms.
Yeah, and I appreciate the honesty because there's just like kind of debate on Twitter, like some people who just trade like their own personal funds, they talk down on like people who trade prop firms for whatever reason. I don't know, because I always thought the business model made sense. You're able to leverage your skill set, get access to capital, and if you lose the account, let's just say, once you get funded, obviously, your only risk is how much you're paying for the fees. But once you get the account, like now that you have 7 figures in funding, like you don't have to deposit 100K in a trading account to get the same type of drawdown equity that you ultimately have now. And again, whenever you lose $1,000, you're not losing, you don't get $1,000 poorer, right? I always try to use that analogy. Like if I fund my own account and I lose $1,000, my net worth just went down
Yeah.
1,000. You lose $1,000 on a prop firm, your net worth stays the same, right?
Yeah,
So
exactly.
it's like, I appreciate the honesty. And I remember like with Kyle, when we were all together, he said the same thing as well. And this is someone who's done, $400,000, $500,000 in prop firm withdrawals in a year. So I think so many people put up they put too much emphasis on like, oh yeah, I'm a real trader, I trade my own funds, as if like Wall Street doesn't trade other people's money, right? But it's
Ye-
only in the prop firm niche.
Exactly. And also one thing I wanted to add was that they say that prop firms, oh, the pass rate is so low. But the thing is, there's a big difference. Even Mark Douglas says it. There's a difference between a regular trader and a consistently profitable trader. There's different characteristics. A regular trader has the mindset of gambling, short-term thinking. A consistently profitable trader has the mindset of long-term probabilities, confidence from their experience, and a bunch of different things. So that's why you can't just say, oh, the pass rate is very low, because a lot of these new traders, they'll come in here with no experience, couple of months into the trading industry. Oh, prop firms, I could get 200K funding if I put in $1,000. They gamble that. And even if you say they get lucky, right? They finally get a funded account after gambling that money. They're still going to gamble that funded account and eventually end up losing it. So yeah, the pass rate is low, but if you were to see the pass rate of consistently profitable traders, I bet you it's much, much, much higher than what it is shown in the industry.
And it's funny that you bring that up because it's only in the prop firm niche that people bring up the statistic that most traders fail. But if you go to a broker, right, how many people are failing or blowing up their initial deposit and they never make a net positive withdrawal, right? It's all,
99%.
but for some reason, when it comes to the prop firm niche, that's when the statistic they want, like, oh, see, not everyone's failing. But it's like, listen, guys, most people are failing in trading regardless. Whether you put that money in a challenge, whether you put that money in a broker, most people are not seeing a net positive return. So the statistics, first of all, it's like you said, it can be flawed in a sense because they're just taking the full data of everyone who's coming into the market. How many people, I get questions all the time with people asking me what's a funding program. Next thing you know, they're purchasing one of the week after. And then, but these are the type of people that are kind of, that are in the statistic, So it would be interesting to see, hey, if you took people who went through, like, let's just say a rigorous, like some sort of training system, people who were in development, and then you put them to a test and then, use the prop firm route, I guarantee you the success rate of that pool of people would be much higher than the current statistic. Because again, the current statistic involves people that some people, they probably don't even have a trading strategy. Some people are probably new to trading and they just want to get funded right away. So it's just like very interesting because only in the prop firm they want to highlight that fact. But if you go to a broker, I guarantee you if they show their statistics as well, how many people end up withdrawing more than their initial deposit, I guarantee you it's probably very similar results. And maybe we could actually talk to a few brokers and see if we can get that, but that's for another day. Now, in 2022, you had multiple six figures in terms of payouts, right? You've been able to accumulate over seven figures in funding with multiple funding companies, as we've talked about. So 2023, what's the plans for you in Q3 and Q4 to end the year?
Yeah, so I started this year with the goal of ending this year with $3 million in prop firm capital. I believe it's not too unrealistic and it's not too conservative. And between 1 or 2 million in funding. I could still aim for that 3 million. I am going to aim for that 3 million, but the past 5 months, Omar and I have been working on this big project in which we want to have an impact in this trading community, just like how prop firms changed our life. We want to create a prop firm. Well, we've been creating a prop firm for the past 5 months since the end of January, in which you can get unlimited trading days, raw spreads, a 10% drawdown. And the best part is that we're putting our reputation, our brand on the line because we trust in this so much. And that's why we've been spending so many months on this project. And one thing about buying a prop firm is you want to make sure that they actually pay out. Like we said, the credibility is a big thing. So that's why we believe that we could become the number one unlimited trading days. No BS about you have to make 10% in 4 weeks. Unlimited, take your time as long as you want. Number one, unlimited trading day prop firm in this industry with the reputation, with good credibility. So be on the watch out for that.
Yeah, so you bring up the whole idea of the prop firm, right? And yeah, this is something that me and Paladin, we've kind of been working on behind the scenes pretty much since February. We also have another partner as well that we'll talk about on a different time. But yeah, Paladin and I, we kind of came together at the beginning of January where, we kind of realized we had the opportunity. We've helped promote like all these other funding companies, but we didn't have the ability to kind of, put our own spin on things, have, our hands inside of the prop firm space, right? And then we came up from prop firms as well, posting, majority of everything that we had last year, growing our brands based off of that. So it was kind of like a very cool project and idea that, we kind of came up with to kind of like come together, put both of our brands and credibility on the line, and then also now be a part of the change. Because again, prop firms have helped us, leverage our own skill set. It's helped leverage multiple other people's skill sets to be able to, kind of get those payouts because some people are limited with capital. So like for us to kind of put our hands into the industry, into the space to be able to help others as well, providing it and then doing things the right way on the back end to make sure the business is sustainable financially. We're able to properly pay people out on a very consistent basis and all the time. So yeah, it's just something that we put a lot of time and effort into it. It wasn't something that we just, hey, let's just launch it tomorrow. It's been like
Exactly.
months in the line. And
Many calls with investors. We have the financial backing. And then, yeah, if you just ever had the question, what is a reputable unlimited trading day that I know will pay me out? Check out Smart Funded Trader. Link is in the bio. And that was just the reason why we started this prop firm. We also want to reduce those trading days. We want to make a shift in the prop firm industry where these prop firms now are demanding 10% in 4 weeks or 8% in 4 weeks, which I always say throughout my Twitter tweets, throughout all my YouTube videos and everything, trying to make 10% in a month is unrealistic as hell. There's always seasons in trading. There's 1 month you do good, 1 month trading conditions are bad, no trades, 1 month where you're just doing bad. So having unlimited trading days gives you a better opportunity to get funded if you have the skills to be a consistently profitable trader. If you have that skills, then go check out Smart Funded Trader.
and something you talked about there, right? I think the prop firm space in general, right? They put this unrealistic expectation, like you said, for someone trying to make 10% in a month, 8% in a month. The reality is this, right? It's very, very difficult to do if the market is in a range bound environment. And let's just say a trader is they usually trade well in trends, right? Or if there's a very clear objective and they don't trade well in consolidation. Shout out to Kyle Jadecap that we've mentioned multiple times on this podcast. He just recently had his a 6-figure month, right? He posted about it on Twitter. Now, this is why I really like admire Kyle and what he stands and his values, because he was very upfront about, hey, the last 2 months when the dollar was in consolidation, he struggled, and he was pretty much around break even during a 2-month span.
And he said it live on Twitter. Like he didn't say it
Yeah,
after the fact. He's like, okay,
exactly.
it's a break even month for me.
Yeah, and again, if you guys check out his YouTube, shout out to him
Jade
again.
Cap, check it out.
Yeah, Paladin will probably put the link in the description. But he has like a funding series where he's showing statistics of his own trading and how he struggled the last few weeks. Well, no, prior to like this current month that he's in. So again, it goes to show that it's very important that like these firms start to adopt this unlimited trading day approach, because the reality is this: there's some talented traders out there that have the patience, that have the discipline, right? And for those traders, it makes a big difference if they can take their time to go ahead and do a challenge. There's a statistic out there on Twitter that like people the fail rate is still the same as unlimited trading days versus having limited a cap, let's say 30 days to reach the profit target. Why do you think that is?
I mean, it goes to show, like I mentioned previously, there's 2 types of trader, right? The regular trader and the consistently profitable trader. Majority of these people failing, majority of these people attempting these challenges, they're the regular traders. They're the traders who think short term, who gamble. So it makes sense. There's that very few. It takes years to transition from a regular trader to a consistently profitable trader, because to become a consistently profitable trader, you need that experience. So it makes sense why the fail rate is still high. But like we said, we're targeting the consistently profitable traders. If you are consistently profitable traders, right? If you are a consistently profitable trader, and say, for example, you go with a prop firm that does 10%, 8% in 4 weeks, and then you have a month, like JCap said, like JCap, who had a break-even month, he would have probably failed the challenge or just get a free retry. Whereas if you have an unlimited prop firm over a couple of months, he would get funded in the end, right? He would get funded after a couple of months when the market conditions start picking up. So we are targeting the consistently profitable traders. I feel like if I had Smart Funded Trader in the beginning of my trading journey, I would not have blown 40 plus challenges. I feel like the pressure of that 10% in 4 weeks was getting to me. So this was another reason why we started this prop firm, to have that shift in the industry. And also for those who have the experience, the characteristics of a consistently profitable trader, we want to make sure that they are actually profitable, that they are actually getting paid for their hard work, for their experience.
Yeah, and I couldn't agree more with you, right? Because like people like on Twitter, they try to be a little bit they try to always just have like just to argue, right? Like, oh, the pass rate doesn't change, it doesn't matter. It's all a marketing gimmick. Like, guys, at the end of the day, if even one person can benefit from the unlimited trading day and they're able to pass a challenge and they're able to take their time, then that's all that matters at the end of the day, right? Because there are traders that are talented, like Kyle. He's a very talented trader. He has a psychology on point. So is it fair for someone like that, right, who's consistently profitable, who has an edge, right? But in a specific in any given month, they might not have the trade opportunities given to them because again, he doesn't control that. None of us control the opportunities the market gives us. So having that unlimited trading days for those specific traders, it'll benefit them ultimately. And
Exactly.
that's kind of like, obviously our goal because we want to find those traders who are doing well. And if someone's consistently profitable, but they might not be comfortable with putting on too much risk on the challenge because they want to take their time, smart funded trader is a perfect opportunity for them because they can go ahead, have the 10% drawdown, have the 8% profit target and take their time. It's interesting because we talked about just now about how the failure rate doesn't necessarily change because most people are just eager to get funded. What are some things that you think a funded trader can utilize in terms of something practical where, hey, they can have a mental shift where it's like, I'm in no need to rush, right? And why do you think people, I mean, you already talked about like why people rush, but is there something that someone can do that can kind of help them, be a little bit, have that delayed gratification?
Yeah, so I remember I did a call where it's like someone mentioned that if I were to tell someone, be patient, they can't just be patient.
Exactly.
You need to place yourself in an environment where you can be patient. So, like I said previously, the example, I was working a job, I was doing college, I was in an environment where I didn't need this trading account I didn't need to hit six figures in this trading account immediately. It was just on the side. So placing yourself, so it all comes back down to that safety net, to that hunter analogy. Placing yourself in a position where you can stay patient is the most important key thing. When I was a full-time broke day trader, I had that 3 to 6 months. Worst period in my trading career. I was down. I was broke. I was relying on the outcome of a trade. I was stressed out. Up London, New York session. Worst thing that ever happened to me. So I highly recommend for the funny traders out there, don't just go all in on trading. It's very, very, very tough on you. It's very stressful. It messes up with your psychology, and I believe that there is a correlation between your trading psychology and your profitability. So in the end, place yourself in a position where you could be patient.
Yeah, and I agree. And we talked about this as well, how, you had that doorman job. Kyle, he had a very high paying six-figure job, and which helped lead to his success, and I obviously had like the insurance brokerage, that I was making money from. And it really does come down to that, right? It's like the old cliche. I think so many people put all their eggs in one basket with trading. And I understand like wanting trading to be like that source of income that really provides for someone's lifestyle, right? But if you guys like again goes back to social media, most people that are living that type of lifestyle aren't doing it from solely just trading, They might offer different types of trading services. They might run a broker, they might run businesses outside of trading. But it ultimately does come down to putting yourselves in the environment that where you can like trade optimally, right? Because most people, and Kyle's brought this up so many times, where it's like most people, the reason why they're so pressed and they want to get the funded account right away is because they need the money,
Mm.
right? And he said that on his funding series, the reason why he's able to wait 6 weeks or whatever the amount of time he's doing this current challenge right now is because he doesn't need the money. He has money coming in from his current funded accounts. He has good amount of money saved up from his previous job as well. So traders being in a position where they can trade better, I feel like that's the most practical thing anyone out there can do, right? Because you're not going to just wake up one day and be like, I'm going to be patient. Like it does not work like that, like you said.
Exactly. And also a big fallacy is people think that the more trading videos they watch, the more they understand a certain concept, the more concepts they add on, the more profitable they will reach. But that's not the case. There's so much more to trading. And it goes back to that 3-step thing I was talking about previously.
Yeah. So I actually want to talk about that real quick when it comes to someone's trading strategy. At what point should someone, because again, as a beginning trader, right? And even maybe intermediate, you don't really know what you don't know. So at what point do you think someone should, like, you know what, maybe that's enough of the trading videos and I should work on my psychology? Like, at what point do you think a trader should realize, like, hey, you know what, I know enough about the technicals and my skill set is up there? When should they make that transition where it's like, all right, I should just stop consuming trading content from a technical perspective and start working on the mindset? Or do you think they should work on both things interchangeably?
Yeah. So when you start off, I highly recommend you study a strategy. And then once you think that you have not mastered it, but you understand it in a sense, then I highly recommend opening up a broker demo account. Or for me, what I recommend if you're in America, because $100 is not that much, but open up maybe a 5K challenge and test out your emotions, how your experience with it. See what's making you lose a lot of money. Is it the trading strategy or is it you getting greedy? Is it the trading strategy or is it you getting impatient? So I believe that you don't need to master a strategy, but once you understand the strategy, once you understand whatever you're studying, you should make that shift into trying out a live experience, whether it's a demo account in a sense, you put in $100 into a live account, or you do the smallest 5K profit challenge. Test it out, experience it for once and see and through that, you'll truly understand how much of trading psychology really factors into attaining profitability in trading.
All right, so we're coming towards the end of this podcast, so let's do like a quick rapid fire. We've actually had a few people that have messaged me on Instagram of questions they want to ask, so I'm gonna pull it up right here, and I'm just gonna go over a few of them. One of them that I thought was actually a really good one, right? Because anyone who follows they know that your trade frequency isn't as high because you're focusing on the higher quality setups, right? You may be taking 2-3 trades a week, depending on the week, obviously. So someone actually asks, he places very little trades. How is he able to pass funding challenges in time?
Yeah, so when I started, I would risk very small, right? So obviously, if I'm only aiming for 2 to 5 trades in a week, I probably won't hit 8% in a month. So what I do is there's a cheat code or a technique, which is you just follow your system, right? 0.5% until you're up 2%, 2%. Once you reach 2% buffer, you can start risking 1% to hit that 8% in the 4th week, right? But say you're in the 4th week and you're only up 4% or you're only up 5%, ignore your trading rules from now on and use that last 5% to exploit it to get to that TP. So say, for example, you're on the last week, 4th week, and you're up 5%, and you think there's only two trade setups left, right? Risk 2.5% on the next trade. Risk 2.4% on the next trade. Just make sure that you have a little bit above profit to get that free retry. So you're either going to get a free retry or you're either going to pass the challenge. It's stupid for you to end the challenge being up 2-3%. You want to make sure that you use everything. And it also works vice versa. Say you're on the last week, you're down 2%. And there's only a couple of days left, right? Use the next couple of trades to risk 2-3% to get you back to break even, but don't get greedy. Don't think, okay, I'm gonna use what I have left to pass the challenge. No, you're down. This is the last week. Yeah. Just get back to break even and get a free retry. So that's how I was able to get funded in the beginning. That's the cheat code I use. But for now, for me, I have a bunch of safety net. For me, a 200K challenge is like me risking 0.25% on my funded accounts, right? So it's like if I lose a challenge, it makes no difference in my life. Whereas someone who buys a 200K challenge and it's a big chunk of their bank account, if they lose a challenge, they're upset for the rest of the day. So for me, I risk much higher. Like I said in the beginning, your goal is to survive before you thrive. I'm in the stage where I just want to thrive, so I risk much more. I have a bigger safety net. I'm in a position to be able to risk higher. But if you are just starting off and you also have the same sort of couple of trades in the week, I highly recommend you use that cheat code to pass the challenge.
All right, and I think, yeah, like you said, like you mentioned, it's important for people, like if you're not in that situation, not to risk a lot in terms of risk per trade, just because again you don't have that same safety net or that safety buffer. Okay, so someone asked, when you're in a flow state, can you describe what it is when you're in a flow state with your trading?
When I'm in the flow state, for me, a flow state is when I take a trade and if I lose or win, I don't care. Nothing happens to me. I know that as long as I follow my trading rules, I'm perfectly fine. I don't care about the outcome of the trade. One thing I'm starting to implement is to not even look at my balance. So for my funded accounts, I don't even know how I don't even know how much I'm up or down by. Something I'm trying to implement. I feel like that will make a huge difference in my trading psychology. It will help me in my flow state because I don't care. So in my flow state, it's basically I'm not emotional at all. I'm not relying on the outcome of the trade. And that is most of the time. I make sure that every week I review my trading psychology notes, that I study great traders, that I make sure that psychology is intact because I truly believe that trading psychology is a huge factor to being profitable in trading.
Yeah, and I think it's very important, like for people to get into that flow state. It's also what you do outside of trading, right? Like creating a routine, making sure like you're eating well, making sure like you're exercising and getting the blood flowing, because that's proven to show like we're able to think better and be in a better position when we have routines, right? Are there any specific routines that you use in order to kind of get into that flow state?
So on the weekends, I make sure I take time out, enjoy nature. I also do have 30 minutes of meditation, but I'm not just sitting down like saying Om and sitting down meditating, right? Meditation can be me walking out, anything, not using my phone, sitting down, taking a cold shower in the sense of meditation for me because it's just me and my thoughts. I just want to make sure that my mind is calm. In today's generation, everyone's on their phone 24/7. Their mind is all over the place. They can't even sit with themselves for 30 minutes. You want to make sure that you are able to have a calm mind because a calm mind will translate into trading. And when I trade, I have a calm mind. When I'm trading, I have a calm mind, and that calm mind was developed from outside of trading, from those meditation sessions.
Agreed. Okay, and we'll wrap it up with this last question. So, what is the best prop firm that you can recommend to traders?
So you want to go with a prop firm that has raw spreads. It also has a good drawdown. You don't want a prop firm with very small drawdown. So a 10% drawdown is ideal. You want to make sure that they don't pressure you to make 10% in 4 weeks, something that is unrealistic in trading. And most importantly, credibility. You want to make sure that you know the owners. You want to make sure that they are actually going to pay out traders. So in the end, what I recommend is Smart Funded Trader. It fits all the criteria. So I highly recommend you guys check out Smart Funded Trader. I'm sure it will fit all your criteria. I'm sure you will like the platform. We are going to become the number one unlimited trading day prop firm in this industry. And I'm just excited to grow this brand with you, Omar. So
yeah, and just to kind of go off on that, I think we're going to be the number one prop firm, period, right? Not just the unlimited trading days, but just prop firm, period. Again, Paladin and I, we're prop firm traders. We came from the prop firm niche. We know what traders want. We have a lot of great ideas that we're going to come out with. So again, guys, make sure to check out Smart Funded Trader. Our launch is coming up soon. And again, if you guys have any questions too, they can message Paladin. You guys can message me on Twitter or Instagram, whatever it may be. But again, this is kind of like our main focus going into the end of the year, creating that great experience for traders. And again, with all the ideas that we have, which, we don't want to like put out too much right now, but we know we're going to give traders the best experience with the prop firm. So again, Paladin, thanks again for allowing me to host. This is the first time I've ever hosted something like this. So it was a pleasure. And again, as always, man, it's always great talking to you.
yeah, thank you, Omar. You did really good, by the way.
Yeah,
So
appreciate it.
yeah, thank you guys. And thank you guys for all watching. And I'll catch you guys in the next video.
Perfect.